we talk about chart of accounts, we're really literally talking about a list. It's no more complicated than that. And every item in the list has a category, a name, a description, and a number. And it's that simple. It might look a little bit like this. The numbers often help people in accounting when they want to organize reports. Some people like to see things in numerical order. Some people like to see things in alphabetical order. And so the numbers in a chart of accounts help keep things in order. But why do we do it? So that we can communicate, so that we can let the numbers in our business talk to us and tell us stories. And literally a chart of accounts very little across many organizations, because 80% of business is business. And so within any chart of accounts, there are 6 main categories, and every chart of account will have these 6 main categories, which are assets, liabilities, equity, revenue, cost of goods, and expenses. And let's take a minute to talk about each one of those, because within each one, there might be subcategories. Let's start with assets, for example. Assets is a category, but within that, you can have current assets, which would be like a bank account is a great example, cash on hand. And then you have fixed assets, things like vehicles, buildings. So this is these are what assets are. And within each major category, there are going to be subcategories. Let's talk about liabilities. Liabilities are your economic obligations. They are what you may owe on the things that you own. And it would be your car payment, loans, any IOU, a promise to pay someone back. It could be that you have payroll tax liabilities, that you're paying your payroll taxes quarterly. So those are your liabilities. And then we have equity. And equity is assets minus liabilities. And I often liken this to not unlike your personal net worth statement, right? What you own minus what you owe is your equity. And this most frequently what I see is owner money paid in and owner money taken out.